As more come Tanks Invest, we're talking about investing, finance, and professional development. As the recording time of after market hour at 4:33 p.m. on Eastern Time, Ethereum currently trade $3,084, down about 2.14% so far. As you can see clearly on the overall crypto market, we've revived just a little bit, not much, but a lot better than earlier this morning when the interest rate spiked to at 1.81% after market open. It was hovering around like the 1.77-ish pre-market open, and then as it opened up, it spiked up immediately, and the whole market just kind of went off from there, obviously in a downward escalator motion. And as the lunchtime rates, across the market start to normalize, but also being supported by a media affectation this time. And thank you to JP Morgan CEO Jamie Dimon on striking an optimistic tone on Monday with a CNBC interview that he expects strong growth this year, even though he saw the Fed's raising interest rates, and he expects that despite Jerome said specifically 3 times this year in 2022, he believes that 4 times this year makes more logical sense, I guess on a quarterly basis, sprinkle across the year. And he also said something about like we're gonna have, verbatim with respect to his speech, is that we are going to have the best growth we've ever seen this year. He believes this is, basically comparable to like a rebound from the Great Depression. So I'm guessing he's, calling the type of time period that we're in right now a Great Depression, similar to what happened, in our history, now, before my lifetime, obviously. And with respect to some of the other verbiage that he has also laid out here, saying that the market have its own fluctuations unrelated to the economy because of human psychologies and emotions, which is something we've been talking about. And he believes that we need to take this kind of market dynamic and justify the growth going forward. We are seeing the volatility, and we will see more volatility to come. But with respect to the current dynamics right now, he also believes, based on what we've been talking about, the factors that we identified on the macro perspective, the interest rate, the quantitative tapering, the Omicron, on the crypto side of the house, he doesn't really lay that out here, is with respect to the crypto ban, potentially in China. Obviously, with respect to the crypto bill that's currently working in triangulations with the Federal Reserve at the moment, the Kazakhstan, energy shortage or shutdown, if you may, that's currently affecting the ecosystem, and et cetera, et cetera, et cetera, right? All of these macro affectation is driving more fear than ever that the price level that we're at right now is not logically justifiable, that we have probably overdone it, based on that's the verbiage that he's been talking about. So if we were to take a watch on the on the interview on CNBC, so I guess we can thank Jamie for the recovery that we're seeing on the equity side, which we see clearly on the aftermarket hours. Dow Jones is up about still flat, 0.02%. We were down to close to about 1.5% earlier today. Nasdaq's up in green right now, up about 0.05%, while S&P 500 is also up about 0.02% as well. So I guess ahead of the obviously the Jerome meeting, we are seeing some normalization. But tomorrow is still gonna be another day, another volatile day, as we have been talking about, because ultimately we do not know what Jerome's gonna be saying. But we'll hear more as we obviously observe and listen tomorrow on some of the keywords, right? The interest rate hikes. So what's the timing for that, right? The quantitative tapering. Are we going to be shaving down even further, or are we going to be triangulating back up? Like how is he going to triangulate or maneuver through the job numbers that we have seen so far? And obviously the CPI report comes out on stitching the CPI, the economic outlook going forward, and then subsequently the PPI report, right? So we'll see. These are still relatively volatile macro factors that no one, can really logically predict the investment sentiment so far. But something we know, and something we have talked about so far, is the scar tissues effects that we have right now. it's only so long that we can, give us this psychological roller coaster, right? Eventually, you will become desensitized, and eventually you will be stronger. And I think we're collectively stronger because like, oh really, down 40%, like, so what? I've seen this many times in my life. And I think collectively, because we are working on this together, we're watching the market together every single day. We're practicing logic. We're using technical analysis. We're using quantitative analysis, fundamental analysis. That we know that translating the numbers, we are extremely depleted. We're oversold right now. So taking the logical risk makes sense, right? So we are more immune to it. So congratulations to you for being a more of a refined, logical investor. It means what we're doing collectively here on Things Invest is working, right? So I appreciate you, and let's go straight into a technical analysis. So respect to recording time again at 4:40 p.m. on Eastern Time. Ethereum contract $3,076, about 2.4% so far. As you can see clearly, we bounced from the 2930 earlier today, and the reason we bounced from there is because that's a flat number, the 2950, and we subsequently got bought up immediately because we are extremely oversold. When we were at the 2930, we were basically submerged, like way underground, like drilling oil, basically at 25 out of 70. That's the worst we have seen on the RSI's perspective. So the market was looking for a reason to rebound, and JP Morgan, I'm assuming because of this optimistic tone they had set on Monday, I would assume that on the asset management arm of JP Morgan bought a lot today because of this specific macro catalyst. As you know, Jamie is somewhat of an influential member in the financial ecosystem, obviously on CNBC on a relatively large platform globally. So it is not surprising that we are reviving up a little bit right now. So the next level we need to go up to is the 3,158 to confirm the recovery, and then subsequently go up to the 3,350, which is the next level for recovery, right? So Bitcoin right now is flat. We've been flat the whole day, not doing much. Right now at the 30 out of 70, so still at a good level to incur risk, I would say. We're way below steel level. We are submerged in the water. Not as severe as Ethereum. Ethereum is actually more oversold than Bitcoin. But we were really oversold earlier today at the 3,066.6 because of the fact that the interest rate hiked to 1.81%. And that does that to the entire market, and that's exactly why it happened this way in the morning for like a really, really brief time. But immediately people bought up, right? So Dogecoin is down about close to 5% right now. We are basically, it's logical to take the risk from here all the way to the bottom of technically 1370. Right now, we're very oversold at the 28 out of 70, so still a good level to incur risk. Cardano is down about 3.2%. At the moment, it's at 113 right now. You can see clearly we bounced off from the 107 earlier today with the 35 out of 70, and as we got to the 107, we were way below oversold, and that's why you see this mini candle here. So right now, it's still logical risk for you to take. Not like obviously as interesting as when we were hitting the 107, but still logical for us to take to take some long-term risk, if you may. Solana's at 135. We bounced from the 133 earlier today. You could see that when we got there, we immediately got bought up because we were oversold, and with a 30 out of 70, so still not a terrible level. We have to basically get momentum to go back to 155 from here. XRP is down about close to 4% right now. 69 is the bottom. Technically, that's why we bounced from there. At the moment, with the 34 out of 70, so still not a terrible level to incur risk right now. Polkadot is down about 5%. At the moment, anywhere from current level all the way down to the 2250 is still a good level with the 37 out of 70. So it's still oversold, but not as oversold as Ethereum in comparison. Algorand is down about 2.61%, 137. Anywhere from 136 again to 125 is still a good level for us, right? With the 41 out of 70. So, still it's not like the best right now in comparisons to the other coins that are more oversold. Shiba Inu is now about 5% right now at the 2673. Right now, at the moment, we are oversold. That's something we know, but we do have multiple levels of oversold, right? So ideally, you buy somewhere around like the low 2000s, somewhere around the next level, like the 14,000, and then to the 3 digits, 900 from here. My test try linger on to stay above $2. Anywhere from 175 to 143 is still the logical level that I would encourage because we are still overbought. In like relatively speaking, obviously, and you can see there's a huge outlier. So this is a obviously how would you say, this is a head and this is a shoulder. So 175 to 143 is still better for us. AVAX down about 6% right now. 80 to 60 is still good. Luna down about 6%, anywhere from 62, 52 to 45 from here. And with respect to Enron, currently we're at 190. On the RSI scale, we are relatively oversold with a 32 out of 70. So still a good level to encourage. We're basically doing a lot of the big ping pong effects because it's a relatively consolidated level that we've had in the past that we've tested way before last year in September. So right now it's actually a fair level to encourage before obviously the euphoria pump that pumped all the way to the 540, right? And with respect to the price level, these are levels identified for today. I made some revisions here then all over again. And let me know if you have any specific questions on the respective coins here. Definitely a volatile couple of days, right? So mentally prepare yourself, right? But ultimately, we know that, this will be over soon. But it's just about a matter of time. And right now would not be the logical, thing to do to just like sell because you feel like, you feel uncomfortable or you feel pain, if you may, right? Remember, these are like the muscles that we're building, and we're building the scar tissues that I keep saying, right? So we get stronger, we get more refined as investors collectively, and I think we are already getting better and getting stronger, and and being a little more sophisticated than a couple of days ago, right? And I think these are the tough times that will grind us up to be the strong investors, the fundamental quantitative investors that will outlast the market and outlast the index funds, if you may. We are actually going to be able to triangulate and apply your own methodology, your own flavor into making even a more beautiful return going forward, right? So hopefully this is helpful. Appreciate you on this Monday, and take care.